What's up, traders? In this video, we're going to talk about where to anchor your VWAP, not the WAP that Cardi B talks about.
I'm talking WAP.
Your volume weighted average price. I'm going to share with you where to put your anchors and why these anchor points are so important. So let's get into it. All right, guys, before we get into the video, I want to make sure we promo Brian's book. If you're interested in trading with the VWAP, with anchored VWAP, you want to be reading Brian's book. And I say reading because it's not a one-time read, put it down and you mastered it. I'm consistently picking this book up to refresh myself, to dive deeper in some of the concepts he talks about, and then I'm trying to see how they are applied into today's market. So definitely pick up Brian's book if you like what I'm talking about today, and if you want to dive deeper into the VWAP. So first, let's talk about where you can put the VWAP, where you can anchor it to. We can have VWAPs from all-time highs, from yearly highs, yearly lows, start of year. Really, they can be broken down into three buckets. First, we're going to talk about time-based anchors. Then we're going to talk about price-based anchors. And then the third bucket is a fundamental-based anchor. Then I'm going to show you intraday anchors, handoffs, and then we're going to see how that can lead to profitable trades. So first, let's look at this chart here of SPX on the 15-minute. You'll see we have a black dotted line going across the screen with two black bands around it. That is the auto-anchored daily VWAP. It starts at the changeover of day, which is 5 p.m., 6 p.m. Eastern time. That VWAP is anchored based on time. It is at the start of the day, 6 p.m. Eastern, the changeover of day. The bands you see are standard deviation bands, which can be used to help you determine how far away from VWAP you are. Now, before we go further, the reason why VWAP is so powerful is because big hedge funds like Ken Griffin, who runs Citadel, they use VWAP to get their trades in at the best price possible. Warren Buffett uses something called guaranteed VWAP, which if you want to learn more about it, that story is in Brian's book. VWAP is used by the top dogs, the big guys, and I think that's why I'm finding so much success with it, and anyone that's picked it up is also making money with it. It just works. It's very simple. So that daily, start of day, time-based anchor is one that I'm using every day. We also can have this blue line on the chart, which is the New York Open anchored VWAP, again, based on time. It happens at 9:30 Eastern time at the New York Open. The purple line is an anchor based on price, one of those second types of anchors, because that was set at the previous high of day until we broke out at the New York Open and ran higher. That anchor is one that would move throughout the day as the high and low change. You would even want to set other anchor points to be complementary to this previous high of day anchor. Now, the third type of anchor, so that's your time-based, your price-based. The third would be this anchor here on CPI, which was back on November 14th. That's a fundamental-based anchor. You can put that on a CPI event, the GDP numbers when they come out, maybe an earnings report if you're trading stocks. But that's where the fundamental anchors will come from. And you can see how that acts as support going into the next week. Anchors can come from many different places. Like I said, time-based, price-based, or fundamental-based is the three main buckets you want to be focused on. Now, for today, we're going to talk about how to take this information and find profitable trades. All of what we're going to talk about going forward is revolving around the A2 strategy, because I'm still using the A2 often for my entry, even after the VWAP is broken. And you're going to see what I mean in a second. But if you don't know about the A2 strategy, that's one of the strategies I've built. We've back tested it over 40,000 trades. That's taught in the starter pack, which is our course. There's a link in the description, maybe flying in. That course is a one-time fee, lifetime access, and you can come trade with me and our group in the Discord chat every single day with these ideas where we're communicating, collaborating, giving each other feedback, and pushing each other forward. So definitely check out the starter pack if you want to dive deeper into the A2. Now let's go to a tweet from Brian, because I think this is the essence of what I want to talk about for the rest of the video. This has really struck with me. It's been something I've used throughout the back half of 2023, and it works really well. He says, don't buy the dip, don't buy the breakout, buy the strength after the dip, when the anchor VWAP from the previous high is taken out. Why? Because it tells us with 100% certainty that buyers are in control. I don't think Brian is a dramatic guy. I don't think he would say 100% certainty if he didn't mean 100% certainty. So what does that mean? Don't buy the dip, don't buy the breakout. Let me show you. We're first going to look at this trade. This was yesterday on SPX on the 1 minute. So what we see initially is a push lower, not shown in this picture, but you can see a low of day is set here right around the London session. We're looking at a 1 minute chart, like I said, of SPX. So that push lower to set that low of day would be the breakout. The dip here is the pullback to the black line. The black line is the daily anchored VWAP that auto anchors at the start of every day. Now, we don't want to sell, in this case, the breakout. We don't want to sell just because it's dipping, pulling back. We want to get in when there's strength after that dip. So we throw a purple line, an anchor point, at the low of day, and that tells us when buyers or sellers have taken control since that time, since that low of day. And you can see here, we have it circled at about 6:45 Eastern, sellers have taken back control after the breakout and the dip. So we're looking then for entry here with these A2 flags after that break has happened. You can get in here, or even if you want to be a little more aggressive, you can trade the break back down, because that tells us, again, according to Brian, when we have 100% certainty that sellers are back in control. This was a 3-point stop loss pre-market. It drops to low of day and then some, about 8 points to the downside. With these trades, with the A2 strategy, I'm literally just looking for 1R. I want to win 60, 70, ideally 80% of my trades, 1-to-1, snag and bag, and continue to make money. Now, we're not going to make a video about, well, should you run it for more R multiples? I've talked about that many times. That's personal preference, but it should be based on math and lifestyle. I don't want to be at the desk all day. I want to make money, get paid out, and leave. So 1-to-1 works really well for me. I'm working on maybe trailing some stops as I have in the past, but why? I want to snag, bag, and go enjoy the time with my new son. You know what I mean? I think a lot of you guys could relate to that. So this was yesterday's trade. Again, we're looking at the break of the purple line. The purple line is the low of day anchor. And then a new low of day is set here. And you could continue to look for trade ideas if that low of day anchor was broken. Now, let me just show you today's trade. So today, here's SPX. I'll blow this up even easier for you. You can see the daily anchor here. You can see even from the changeover of day, we've been above that anchor almost all day, painting A2s long. You can see those green flags all over. But this morning, when I get to the desk, we're looking for the break of the high of day anchor. So high of day is right here, set at 7:30. We throw the purple line on there. We get a break here, pull back. It holds this structure, and then a couple of our Black Shirt Club members ended up buying here with a 3-point stop. I like the 3-point stop because it's not this current structure, it's the previous higher low, which is really tight still. And this trade runs to 1R right here, and then 2R now right before the news. Of course, the 8:30 news sends some volatility into the market and shoves it lower. But you can see that high of day anchor being broken, held, and then that's when we have 100% confirmation that buyers are in control. So again, what this looks like is we're not going to buy the breakout for the new high of day. We're not going to just buy on the dip. We're going to put an anchor to the high of day, and we're going to buy it when that anchor is broken, which happens right in here, right? That anchored VWAP tool is on the left side here, right here as a volume-based tool. The other indicator that puts on the daily is a VWAP AA. We are working on an all-inclusive ASFX indicator with VWAP and A2 coming from Lux Algo, which was the sponsor of some of our previous videos. I'm going to make videos about that once it's ready. That's going to be your one-stop shop for basically this entire strategy. So I'm going to stop the video here. I hope this was valuable. We talked about anchor points. We talked about the intraday handoff type anchors from high of day, low of day. We talked about not buying the breakout, not buying the dip, but buying after there is confirmed strength. And ideally, like this trade here, using the A2 for entry once that break has happened. So I hope this has helped. Make sure you check the description down below. I've got links for everything, Brian's stuff, my stuff, everything you guys will need. And hopefully I'll see you on ASFX TV this week, where we'll be calling trades live just like this, right in front of your eyes. So check that link, come join us on ASFX TV, and I'll see you guys in the next video.